Doug, thanks for being with us today.
Dave, thanks for having me. We're really excited to talk about the great things that are happening at Goedeker.
I want to begin today with your giving us a brief overview of Goedeker's, the history of Goedeker's, and your products and services.
Sure. Goedeker's been around since 1951. It's one of those classic brick and mortar beginnings that was in televisions, furniture, and home appliances, and morphed in the late 2000s, 2009, 10 into an online business that sells primarily appliances and furniture. Always been known for great service, a really strong website, and a really high product knowledge base. So we've had a nice heritage of logistics and marketing and good selling skills.
And what percentage of your business is online versus showroom?
Well, at this point with COVID, even before COVID, it's greater than 95% is online. We do have a single store in St. Louis, but we operate primarily as a 95 to 98% online business, pure play.
You recently announced the acquisition of Appliances Connection. Talk to us about the deal and what it means for the company.
Sure. We had an opportunity to engage in a conversation with Appliances Connection, which is notably number one or number two in the pure play appliance space. And we were fortunate enough to enter into an agreement that we're working on finalizing to a deal structure. And it's just a great synergy between two companies that are very similar. So really excited to be selling more appliances. Both of our companies were in 48 states. Both of our companies had tremendous websites, history of customer satisfaction. So really a nice marriage, and we're really working our way through that. And we just think so many more customers will be served more quickly with more types of product once these two companies are put together.
What's the revenue look like and the earnings look like in 21 for the combined entities?
Sure. We've got visibility at, we think, $550 million as a combined entity, and we think the profitability will be $37.5 million. So a very strong sales number and a very strong earnings number.
And when do you expect to complete the acquisition?
We're now targeting for the mid to latter part of the first quarter. We've got to move through, obviously, the various things that you do, but that's looking like the date that we'll be able to move forward as one company.
Okay, and the deal's valued at about $210 million, correct?
That's right. It's a $210 million deal, of which $168 million of that is cash, and then $42 million is in stock. And we're still working on the financing details to make that happen. But we're very optimistic and just getting lots of feedback from financial institutions. So we're not quite there and ready to tell you what that's going to be, but we're working on it, and it looks really good.
This will make you one of the largest online retailers of appliances, correct?
I think we will be the largest pure play retailer of appliances in the country. Certainly Best Buy, Home Depot, and Lowe's sell a lot of products on the web, but they also operate lots of stores. But we'll be the largest pure play appliance retailer in the country.
Yeah, you recently announced record sales for the 9-day Black Friday period. What's driving this growth?
Well, we've turned up the marketing since March, and we've seen no degradation of interest by consumers. So every time we spend more in marketing, we get many more to come to us, whether it's Black Friday or Cyber Monday. And we were just blown away by the response in those 9 days. It just broke all records at both companies. So it really wasn't one company or the other. Both of us really knocking the cover off the ball, and consumers continue to respond because they're starting to realize that they can get a better customer service experience, better access to products, equal or better pricing, tremendous logistics through this site at Goedeker's and through Appliances Connection. So I think it's a sea change. I don't think it's going away. I think that part of the business will keep growing, and we'll just be a bigger part of it.
Well, how big is the market opportunity for the combined entities?
Well, we think it's a $1 billion business in 3 years, and that billion will play against the $24 billion that we anticipate the home appliances, white goods home appliances business will be in 3 years. So we expect to be a $1 billion player in what will be, at that point, a $24 billion entity. So roughly 4% market share, which again is a long way from Home Depot, Lowe's, and Best Buy, but it's, as a pure play, it'd be number one.
What brands do you represent?
We've got the top 30 brands and appliances represented in both companies. We're very happy that we'll be able to put Appliances Connection in a better position with KitchenAid, and they put us in a better position with Viking and Sub-Zero and Miele and Wolf stoves. So really nice access for both sets of customers. And then, of course, you've got GE and Electrolux and Samsung and LG, all the big brands. We primarily represent the better, best, and premium and super premium brands. That's where we sell.
What would you consider your main competitive advantage?
I think our competitive advantage comes across three pieces of it. One, I think we do marketing that aims at the consumers and attracts them at a very good advertising to sales ratio. Number two, we've got great access to brands, which not everyone has. And then number three, we wrap that up with very good logistics that are getting better in the investments in the systems and the people and the processes. And we expect that cycle time to continue to improve and really attract more customers to our space. So those three things: marketing, logistics, and access to brands.
Now, you've put together an impressive management team. Talk to us about your background and some of the key players on your team.
Sure. I'm very fortunate to have spent more than 25 years in the hard lines business, having been the president of Sears Appliances and as well as the chief merchandising officer for Circuit City. So when I came back into the space, I was just happy to bring that experience to bear. I've had other experiences in business that will add to how we go to market as a company. But very happy and pleased, and joining me in this work is a very established CFO, Bob Berry, who comes to us with public CFO experience. And on the marketing side, I've got Sean Harcum, who's got 15 to 20 years in the digital space. Mike Hargrave is a senior merchant who's able to bring his Sears appliance experience to bear on the merchandising side of it. And then Jacob Gihas, who really just joined us most recently as the VP of Logistics, coming from FedEx supply chain. So really some great blue chip backgrounds to bring forward our business, and we're ready to scale. And then when we put ourselves together, we're very fortunate. Both Albert and Eli Fuarte, the founders and the president and vice president of Appliance Connection, they're gung ho and ready to join us. So we're gonna lock arms and the seven of us and probably a few other people are gonna really make something happen as a management team.
Doug, what's the essential value proposition? Why should investors take an interest in Goedeker's today?
Well, I think when we look at the landscape and look at pure play retailers and look at the ratio of a stock price versus sales, or a stock price as a multiple or an enterprise value related to EBITDA, we believe we will be undervalued in 2021. And there's an opportunity here to continue to get in right now before the combination takes place and acquire some stock at a reasonable price. And then, I think post when we're put together, I think there's going to be more opportunity. I think as the market starts to realize that we're going to make sales and we're going to be profitable at the same time, and there's no lag between that anymore, we'll see a nice investment for folks that invest in Goedeker.
Well, I think you're right. I mean, the current market cap is under 50 million. If you have sales of 550 million, the industry comps trade at 2, 3, 4 times revenue. You can do the math. Given that metric, you're very undervalued today.
Yeah, we feel the same way. And again, sometimes it takes a little while for the investment community to catch up with the circumstances. So we're very patient, but we think there's great value there.
Doug, thank you so much for being with us today. It's a great story.
Well, thank you. And again, we look forward to continuing to talk and get our story out there. We think it's a great story and one that will really play well in 2021 and beyond. So thank you very much, Dave. Really appreciate it.